All right, welcome to Talking Investing, everybody. Today we have a very special guest. We have Matt from CleanSpark. So I'm going to first just give him 1 minute to just say hello, talk about who he is, and then I'm going to ask him not to steal my thunder. I do have a question. There's some news that came out today, so we'll get to that next.
Great. Hey, Tom, thank you. It's great to be on your channel. Thanks for all the work you do in the space. I've watched a lot of the videos and the amount of research you put in, I think, is second to none. So thanks for having me. My name is Matt Schultz, and I'm the executive chairman and co-founder of CleanSpark. I've been with the company since inception, so super excited to be here and talk to you about it, share with your viewers some of the stuff that we've got going on, and maybe answer any questions you might have.
Outstanding. All right, we've talked to Isaac, I think, a few times, who's been very helpful, but I know we've gotten a lot of requests for Matt. So I know you've actually been generous, giving me some time to hook up, and on my end, I've had a little scheduling issue. So I appreciate you getting here and finally getting together. I got a bunch of questions for you, so I'm just going to lead right off with what I teased at the beginning. You know, we obviously I didn't know this going into today's interview, but you guys did have a press release today. So can you let us know a little bit about? I was surprised by this one, so let us know what happened.
Yeah. So our approach to the space has always been kind of measure twice and cut once, and have discipline in our strategy. And so a year ago, we're 3 days before our earnings call, our annual report, and a potential partnership that we had notified us that, hey, we're gonna be behind on our hosting agreement. This is a deal that we had with a company called Lancium. So we made the decision back then to revise our guidance. Not that we couldn't go find other places to mine, but because what we do in a very specific way. And so rather than just mining to mine, we adjusted and we said, hey, we're not going to hit 23, but we're going to hit 16. And so since that period of time, you've seen us make a series of very strategic acquisitions of mining rigs. Some of the miners that were unable to stay in business had made large orders with Bitmain, and instead of being able to pick up their orders, Bitmain instead issued them coupons. So, hey, you can use this to offset 30% of the price of an order in the future. Well, they didn't have the money to buy the rigs originally. They certainly don't have the money to buy the rigs now. So what we did is we started buying coupons for pennies on the dollar. And what that's done is that's enabled us to buy rigs at the bottom of the market, and then use those coupons and factor in the purchase price of those coupons into that to get us, some of the lowest costs of equipment anywhere in the space. And so we gave guidance to 16. We bought sufficient machines to get to 16, but what we lacked was that delta in power. We were about 20 megawatts short. And so this opportunity presented itself. And by the way we've conducted ourselves in the state of Georgia, we work truly in partnership with the cities. The communities make money when we buy power. And part of the Territorial Act in the state of Georgia allows that sales tax on the utility generated in that community stays there. So you got these little towns of 3,000 to 5,000 people that are seeing, hundreds of thousands of dollars a month in revenue come from CleanSpark being located there. So now we're having cities that are reaching out saying, hey guys, come here. And so it's kind of really what the Dalton story looked like. We've been working with the Dalton utility, looking for options there. And this existing turnkey facility came available. And at the purchase price, it came in, a bit of a premium to what we stick build stuff like we're building in Washington right now. We've got 4 buildings, 500 feet long each, and those are about to come online. And we're spending about $400,000 a megawatt. Maybe just a bit more. And so this comes in a premium to that. But I'll be honest with you, Tom, we've got a load of 3,000 miners that'll arrive there Monday and be plugged in hashing. So there'll be, 10 megawatts of machines plugged in within a week. So it fit the description. It allows us to buy, power that meets our requirement as far as non-carbon emitting power. It allows us to continue to work with these rural communities in the state of Georgia, and it bridges the gap for the threshold to get to the 16 exahash that we committed to.
So that was one of the things that jumped out at me is it seems like this is, there's no construction. This is done. This is turnkey. It's ready to go. Does this come with any machines, or are you just putting your existing? I'll get to the fact that you guys have bought, as you just talked about, a significant number of machines this year. So I don't think it's about the machines. Like you said, you're just looking to find the last places to round out your 16 exahash. So were there additional machines with this, or are you going to use all your own machines at this facility?
So by design, we're putting all brand new machines fresh out of the box. What we've talked about heavily is that coming into halving, it really comes down to the efficiency. And there, hopefully you and I can talk about it a little bit later, but we believe there are three critical components to efficiency. But first and foremost, it's about machine efficiency. So it wouldn't make sense to put in, a 3,800 watt machine coming into halving, knowing that, post halving, unless Bitcoin goes parabolic, it's unlikely those machines are going to be profitable. So instead, what we do is we focus on the most efficient equipment. So that thing the initial 3,000 machines are likely to be the Bitmain S19J Pro Pluses. So, just for your GWiz file, Tom, those come out of the box at 122 terahash and about 27 joules per terahash energy consumption. We use both proprietary and secondary machine learning technology tools that enable us to, with the stock power supply, bump those up to 162 terahash. It increases the consumption up to about 33 joules a terahash. So when Bitcoin prices are high and energy prices are low, we can step on the gas even in an air-cooled environment with a stock power supply. But the inverse of that is also true. So if Bitcoin prices are lagging and energy prices are up and it squeezes the margins, we can use that technology to slow that machine down to 95 terahash, but then it's only consuming 22 joules a terahash. So it effectively becomes a much cheaper, efficient version of an XP. So it's all about efficiency for us. So those are going to be brand new shiny machines. First 10 megawatt building is empty. Our fleet is arriving. The second 10 megawatt building is being emptied, and we'll be filling that up as soon as they arrive.
Okay, yeah, I've noticed. I kind of made a little list here. You guys have had an awful lot of releases this year, so I'm not going to spend a lot of time, but just real quick to sum up, in February, it looks like you guys bought 20,000 machines. I think those were the Pro Pluses. Then just a couple months later, month and a half later, you bought another 45,000 machines, and then on June 1st, another 12,500, and all of those, I believe, so that's 57,500. Those are all the XPs. Does that sound right?
Yep, that's correct. And we have, a few thousand, several thousand XPs in our fleet hashing right now. We've taken a bit of a different approach, kind of using our energy background, and we've looked to identify ways to maximize the profitability of all the rigs. And so to kind of circle back to your last question, globally, I think the average on the Bitcoin blockchain, the average machine is between 38.5 and 42 joules per terahash, or watts per terahash, another way to think about it.
Right.
And our fleet, by the end of this 16 exahash deployment, is going to be in that 24 to 25 joule per terahash fleet average. So what that means is that, we can effectively mine more Bitcoin for the same power. And being mindful of that, obviously, Bitcoin, we certainly expect it to increase in price. I mean, if you think about it this way, currently 900 Bitcoin are produced every day. So a lot of people look at halving in that, oh gosh, well, miners' rewards are going to be cut in half. See, I look at it from the opposite side of the coin. And what that means is there are only going to be 450 new Bitcoin minted every day. Given the basic fundamental Econ 101 principles of supply and demand, if demand remains stable and supply is cut in half, it should certainly have an impact on the price of Bitcoin. However, hope isn't a business strategy. So what we've done is we've prepared ourselves with the proper energy agreements, the proper energy mixes, and the proper machine fleet efficiency that we're set going into halving, and we'll be, along with our friends over at Marathon, the two most efficient mining fleets anywhere in North America.
Yeah, so I know they have a significant number of XPs. It almost seems like your ratio might even be better than that. So are you guys going to retire some machines in order to get to this spot, or are you able to leave? And I guess I would ask you this question. The S19J or S19J Pro, whatever that original machine was, that's only a few years old. Is that now going to be obsolete come the halving, or does it depend on the price of Bitcoin?
That's a great question. So an S19J Pro 100 terahash machine is a 3,000 watt rig. So you're talking 30 watts per terahash, which puts it substantially below the global fleet average. But it's important to note that with a stock PSU, the power supply unit that comes on the machine, we can ratchet that down to about 75 or 80 terahash, but it's only consuming 22 plus watts per terahash. So it becomes the same efficiency as far as watts per terahash as an XP, just on a smaller scale. So what you then look at is, where does that balance on the CapEx? Does it make sense to rotate that out of the fleet, or do we run it until it dies? So, that's a decision that's made in real time. And we have active models every day that talk about whether we're in low power mode or underclocking, whether we're overclocking, whether we're, choose to sell some Bitcoin. We've been very honest about the fact that we sell Bitcoin to cover our operating expenses. Just, it doesn't make sense to dilute shareholders, pay the light bill and salaries. So we sell Bitcoin to cover that, but we've continued, as you've seen, to grow our hodl, and we're very bullish on the underlying commodity, and we feel like there's been a strategic way to do it, and that's been kind of disciplined capital management.
Okay, it seems like the way you're describing it, your I'm going to say cost per coin, your overall efficiency, your energy cost, it stands to go down. It sounds like you're going to become even more efficient going forward. Now, obviously, the halving and all that will change the actual cost per coin, but you're expecting to increase your efficiency, is what it sounds like.
Substantially, yeah. We've done that. There's a chart that's published. I think Wolfie Zhao over at Miner Mag does it, and it's the realized hash rate. And so he looks at all the miners and how much hash rate they have online, and then how much Bitcoin they actually produce. And they rate that. Is your realized hash rate 100% or is it 70? And what we found is, being a prop miner, so proprietary, soup to nuts, we run the operation. So I hosted an analyst from a fund in London that came over to meet with us, and they toured our facilities and commented on the fact that what's consistent, whether it's air cooled in pods or air cooled in buildings or immersion cooled, what's consistent across our fleet is the culture. And so what that means is, having the ability to influence the efficiency and the uptime and the operations of the machines is a big deal. So when we focus on that uptime, and if you look at that model, 100% uptime means all of your hash rate running all the time. It can be a little bit misleading, because if, like what we've done in incidents where, it's 88 degrees in the middle of the day in Georgia, and it makes sense to put in low power mode, those machines are going to clock a little bit less, but we're actually increasing the margin by slowing down the machine. So it's one of those things. It's an active process. It's not passive. We have technology that assists us with that decision gate, but the focus is on really maximizing the amount of Bitcoin produced and maximizing the earnings from that activity.
That makes sense. So you're looking to get to 16 exahash, and I know we talked about you've bought the machines. It looks like you've got the energy lined up. A couple of questions on that. Is there, you talked about selling your Bitcoin. I want to ask you a little more about that. I think, you guys were one of the first ones to go to that strategy. Early on, there was a lot of skepticism, but ultimately, I think everybody followed in your footsteps and ended up doing that. I don't think that. I know basically at one point, everybody was selling all of their Bitcoin, and I still think almost every company sells a portion to fund operations. So I think you guys were leaders on that one. So that leaves, there's kind of three levers, as you guys, I'll use your words from a couple of conference call meetings ago, one of which is debt. I feel like debt's kind of off the table, in this industry for now. The other one is selling the Bitcoin that you mine. And then the third one is, selling stock. So you've obviously had to do dilution. I know I get a lot of comments on the channel about dilution. I'll give you my answer, but then I'm hoping you can give me your answer. I mean, the way I look at it is your stock dilution is significantly less, than your growth rate. So, is it accretive, or, is this stock dilution to, pay for operations, or is this stock dilution to grow? And obviously you guys have been amongst, if not the fastest growing. You talked about going from, I think, 22 or 23 down to 16, but still, that got you from 6 to 16 in a year. And the previous year, I think you went from 2 to 6 exahash. So, you guys have been very consistently growing. You're one of the fastest growing companies. And I'll just say that you've been, I like to say, I like companies that do what they say they're going to do. So you've been pretty on target with what you said you were going to do, versus what's actually happened.
Well, I appreciate that feedback, and interesting choice of words, target. I feel like there are times that we walk around with a target on our back. We get picked on for a lot of the decisions we make. You shouldn't have sold Bitcoin. You're not a real Bitcoin miner. You're not a Bitcoin maxi. You're not this, you're not that. And what I think we've reached the conclusion that we fancy ourselves to be Bitcoin rationalists. So we're very bullish on the underlying commodity. We fully intend to continue to grow our HODL, which we've consistently done. But it doesn't make sense to put the burden of operation on the back of the shareholders. But it does make sense, as we're all shareholders, it does make sense to grow accretively. So you talk about dilution. Last year we sold 70% of the company. Okay, that's a lot of dilution, but we grew by 239%. So at the end of the day, you have a smaller percentage of a much larger enterprise. Ultimately, the asset value that you hold has grown through that dilution process. And that's kind of the measuring stick. We talk about having placed that large order back in February. Those 20,000 S19 J Pro Pluses are paid for. We paid for all of the infrastructure that supports Washington. We paid cash for the facility today. The machines are going in there, are all paid for. The Sandersville build out is well on target. We've got milestone payments due for the miners. But what you'll find is, like April, we used the ATM. The proceeds of the ATM paid for all of the miners that were ordered, all the infrastructure build out to get Washington where it is, and to pay for what we've done today. So we're continuing to grow faster than what the dilution or that word would represent. So it really is a measure in efficiency. And so maybe that's an appropriate way to kind of plug this. We used to say, that it was the three levers, and you're right. Debt is not what it once was. I mean, goodness, Iris Energy, surrendered 2 complete companies that they had created, and all of the machines to hold those in order to satisfy debt. We've been buying coupons on the secondary market, or creating a market for those from miners that couldn't buy. The debt on those is problematic, and there's a big overhang. There are a lot of companies that really got overextended. What we've started to see is debt come back around for companies that have been prudent in their capital management strategy. So, I can tell you, we're starting to see term sheets that are circulating. There are offers for, convertible instruments where you could get the cash up front. It's convertible to stock or cash in the future, single digit interest rates priced at a significant premium to the market. We just haven't found something that made sense for us as shareholders. So there are opportunities, but until then, an ATM allows us to choose if and when to be in the market. Obviously, we don't add to a bad day. We try to take advantage of good days. But at the end of the day, if we can continue to grow by 300-400% and sell half of the company, then at the end of the day, everybody is better off. Every one of us are shareholders. And, if you've looked at any of the Form 4, that none of the insiders have sold. We're all, focusing on the future. So that's kind of the long answer to that story. We're using some Bitcoin to cover our OpEx. That's just common sense. We'll use strategically Bitcoin for CapEx if it's going to be accretive within that first quarter, but really we're relying more on equity and researching opportunities for debt.
Okay. So you don't want to say, once we get to this, we're done diluting. You're going to, management's going to use this judgment, and as opportunities present themselves, if they're accretive and they outpace the, your growth ability outpaces the dilution, you're going to be open to that going forward.
Yeah, I think you're going to see us be pretty aggressive through the end of the year and coming into halving. There are opportunities. I could sign an unsecured debt instrument today. The problem is the uncertainty surrounding halving. The amortization schedules are such that it would put the company on a cash flow bind, and we're not willing to go there. So I would not expect us to continue this rate of growth for the first 2 or 3 quarters following halving. I think we're going to be figuring out the market because, Tom, at the end of the day, if there's a miner that has a 40 watt per terahash or 40 joule per terahash fleet efficiency average, post halving, that becomes an existential threat. So we wouldn't go in and buy that miner for those machines, but we would be interested in the infrastructure and the power contracts and stuff like that. So I think what I would say is never say never, but our plan is to be disciplined to get to where we committed to be, and then kind of step back and measure where the market is and find out what's the most efficient way to continue to grow.
So without putting words in your mouth, if I'm hearing you correctly, there's the potential that there'll be opportunities, maybe a little bit of a pause around the halving, because obviously that's a massive event and it changes the math on everything. But after the dust settles, and obviously the price of Bitcoin is going to be a factor in all of that as well. So is there any, you mentioned the Lanthium facility earlier. Is that just off the table? Have you moved on from that, or is that something that you could circle back around to?
So we still have optionality there. The challenge is that those guys do a really nice job with what's in their swim lanes, and they're good at the technology side. I think with the shift in the capital markets, their access to capital to build out infrastructure kind of went away. And our agreement with them was, kind of a hybrid hosting model where, we both win when Bitcoin wins, and we both, kind of bear the burden when it doesn't. And it was a favorable agreement. The agreement still exists, but I can tell you as time has gone on, we've really become very comfortable with the state of Georgia, dealing with the policymakers in the state of Georgia. We've been very well received. We've been welcomed in the communities in which we operate. And with that Vogtle 3 being powered up this year, Georgia is now a net exporter of nuclear power. So with that surplus power, and these little cities invested in that when Southern Company went bankrupt 4 decades ago. And so to have these little 49 cities in the co-op be able to realize some of the revenue from their investment, keep that power in Georgia, and then to buy more quantity at the city level, it positively impacts the utility price for the balance of those communities. So we really like where we're at right now, and I'm certainly, there's probably a dozen decks or term sheets on Zach's desk at any given time. Understanding, the regional concentration and looking at risk and looking to grow, outside of the country or outside of the state. And what it comes down to is just doing it the right way. We have to have access to the right people, the right power, the right places, the right environment that makes sense to continue to win the way that we have.
Yeah, it seems like you guys have really capitalized on the state of Georgia. It was on my list to talk to you about some of what you just mentioned. Is you're very concentrated at the moment. Do you guys consider that a concentration of risk? It sounds like you have a great relationship with the state of Georgia. I know they're one of the few states that is, they're an exporter of power and it's the nuclear power. So, are you guys, is a high percentage of what you do, or what percentage of what you do is nuclear? And I know, you're not tapped in directly, but by using the grid, you've talked about I'll just dabble a little bit into ESG. I don't want to talk too much about this, but just, obviously it's a big topic that's out there. Is this a part of how you guys stay green?
Yeah, it really is. So, we're challenged in the fact that we rely on third-party data for that information. So the city of College Park, based on their participation in the Vogel series of power plants through their relationship with MEAG, publishes on their website that they're 95% non-carbon emitting power. Georgia Power is more ambiguous when it comes to that. So in our facility at Norcross, that is full immersion, it's got the lowest PUE and highest efficiency of any of our fleet. That's, it's 100% uptime, unless it's an anomaly, and so it's a super efficient fleet. But because of the lack of clarity as far as what the energy mix is there, we participate in a program called Simple Solar, and it's basically dollar for dollar back into renewables in the state of Georgia. So it's not, greenwashing. It's actually an investment in new renewables. And what one of the things that we learned from the city of College Park is that they were able to sunset a coal-fired peaker plant 5 years ahead of schedule based on the volume of power that we purchased. Because at this point, Tom, we're the largest industrial energy purchaser in the state of Georgia. So to be there in a state that has a high concentration of nuclear power, that most of the MEAG cities that we work with disclose 90+%, and that we have the ability to, to positively impact that, it really does make a big difference. And then, ESG is one of those things that I hate the fact that it's become kind of a virtue signal. But if you just break it up into the individual silos, industrial scale Bitcoin mining has a very bad reputation because of misinformation. So if we can demonstrate that we can incentivize the continued construction and development of renewable energy, then it really fits into Elizabeth Warren's map of the world in greenifying the country. From a social standpoint, it just makes sense to be proactive on that level. So in the state of Georgia, we employ in these small communities. I'll give you an example specifically that we see as a big social benefit. MEAG generates the power and sells it to the city of Washington, Georgia. Beautiful little town. Tom, this town, the foundation of the building still exists, where the documents were signed that abolished the Confederacy. I mean, there's some major history in this beautiful little community of 4,000 people, and Mayor Bill has become a great friend, but they buy power from MEAG and they sell it to us with a little bit of a margin on every kilowatt hour of power we buy. Right. And then, like I mentioned about the sales tax staying there, so CleanSpark is contributing 6 figures a month to schools, parks, and libraries in these little towns, and providing high-paying, meaningful jobs. So for me and for us, that's a real measurement of our social impact. And then as far as corporate governance, I really feel like we try to be transparent to a fault. I had an analyst tell me, normally I try and pull more information out of my clients that I cover. Sometimes I want you guys to not share as much, because we do, we really pride ourselves in that. So, we disclosed we were going to sell Bitcoin when it was $60,000, and everybody got after us and said it was a bad idea, and we continued to sell in the 50s and 40s and 30s. And some of our peers diluted their shareholders and bought more in the 30s. And we felt like it was a prudent business practice to be mindful of our equity, and use that Bitcoin to grow as those prices were coming down. And we did that. I think certainly we've sold some shares to support this growth, but at the end of the day, I think you'll see that we'll have paid less for our hardware and infrastructure than anybody else in the space. And it just comes down to timing and methodology. And rather than having $500 million or $750 million in debt outstanding, we have $18 million in reasonable short-term equipment-backed financing and over $500 million in assets. So we've really focused on how does this land? How does it make sense to me as a shareholder? My mom's a shareholder. The people I care deeply about bought and hold stock at $8, and so these decisions aren't made for what's in it for me. That's not how we operate. It's about how can we be the best member of the community, partner of the community, support the people that work for us, create value going forward, supporting the blockchain, and be steadfast in our one of the things that we talk about. Isaac, who is infinitely smarter than most people in our company. And he wrote me a little intro to a keynote in London, and what he said is, Bitcoin is the culmination of decades of research of computer science cryptography networks, and game theory, the result of which is not just a new payment rail, but an entirely new monetary system. And if you're a Bitcoin bull, and if you believe in that, then you have an obligation to support that network and to do so responsibly, honestly, and as efficiently as possible.
Yeah, that sounds like Isaac. Yeah, I mean, I'm glad that you talked a little bit. I don't like to do too much probing about ESG, but it's kind of a cloud that looms over the Bitcoin miners, and I think that's maybe unjust is the wrong word. I think it's misplaced. If we can tell more of the story that you just talked about, it's really it's one of the cleanest industries really out there, in my opinion, as far as I can tell. And there's a lot of people focus on the E, with being environment, but most specifically energy. But the S and the G are a big part of it, and I know you guys in specific, and a lot of your peers are dedicated to that. So I'm glad to get a little chance to talk about that as well. A couple of questions coming off of what you just talked about. The first one is, so between now and the halving, obviously you talked about supply and demand, and we're still getting 900 Bitcoin a day. Are you guys going to make a push to try and do a little more hodl and get some more Bitcoin on your balance sheet? Do you have a target in mind, or just a concept?
Yeah, we're growing. Our plan is to continue to grow that every month. We don't have a dart on the wall that's circled that it has to be this number, because hash price and energy price and the price of Bitcoin and the share price of CleanSpark stock are all variables that go into the decisions that we make. So the idea is we want to continue to grow our HODL balance. We think that's really imperative. But we don't want to do so at the risk of diluting our shareholders down to the point that what we've done is less than accretive, because we have an obligation. People have entrusted us with an investment, and they expect, we're a small cap stock, and the market is fraught with risk, but we take it very personally that people have entrusted us with their capital, and we want to make decisions that we would make if that person is my mom or my family. And so will we sell Bitcoin if it makes sense to grow faster and not dilute as much? Yeah, we would do that, but our intent is to continue to grow our HODL, and I think you'll see with our monthly updates it's going to continue to increase significantly.
Okay, that's good to hear. So just playing off of what you've just talked about, you're a shareholder, you talk about, family members, your mother's a shareholder, a lot of the people watching probably are. I'll disclose I'm a shareholder. One of the questions I get hit with an awful lot is, you guys have an incentive program for management regarding shares. Is that something that you can shed a little light on? Because I know I get questioned about it a lot. I imagine you earlier said it feels like you got a target on your back, and I don't know if this is one of the things you get hit with, but I just wanted to give you a minute to just talk about that if you're willing to.
Yeah, it's a tough topic, because what I mentioned is one of our analysts said you tend to over disclose. So the board put together and disclosed a compensation program that basically had 3-year benchmarks, and a lot of that was options based compensation. I mean, I got a update today that just based on time vesting, another block of my $23 options has vested. So the issue is that according to the accounting rules, the value of that award needs to be disclosed. So rather than do it a year at a time and print all the caveats, we disclosed a 3-year compensation package and included the full value of the exercised options. So, I get an email, stock will go down 10, 15, 20 cents in a day. And somebody says, how can you sleep at night making $20 million a year? Well, I can assure you that's, more than 90% inaccurate. A lot of that is options-based income. And, Tom, if we're being off the cuff and being honest, we were really successful last year. And in, November of 2021, the board was generous enough to give the executive team an additional share grant. Stock at the time was $18. So we're operating at the time, purchasing Waha Technology, purchasing Sandersville, buying all these rigs. We have material, non-public information. So we're prohibited from selling a single share of stock, even to sell to cover. So fast forward from November of 21 to April of 22, I got a grant of shares that was worth several $100,000 at the time. And by the time I had to pay taxes on it, the tax bill was worth more than the shares. So I got to take the opportunity to borrow money to work for this company. So, and that's first world problems, not woe is me, bleeding heart, because I have a generous salary, and I expect my options and shares to be worth an awful lot of money someday. But I can tell you this: nobody's bleeding the company dry. I live in the same house I lived in for 19 years. We're pot committed. There's not one person on my team that would sell shares of stock at $5 or $6 or $7 or $8. So I caveat that I wouldn't. I can't speak for anybody else, but I feel really, really comfortable and confident in the way that we've approached this. That vesting period and that 3-year grant package will have expired. So I think you'll see next year everything will remain equal, but our printed compensation will look vastly different just according to accounting rules. I can certainly assure you that the reported income for Zach Bradford and myself is nowhere in the realm of reality.
All right. Well, I appreciate you be willing to talk about that. I have addressed it many times on my channel, but I don't have the same perspective that you do, and I know it's a tough topic. So I think that helps clarify a lot. So hopefully some people can, they'll take whatever they'll take from it. But I appreciate that answer, and that makes sense to me. And then I've always said, things that are structured where, I'm a shareholder. If management wins, by the price of the share going up, then I win. So, I feel like that's aligned. And so anyway, enough said. I appreciate the, your candor in sharing that.
Yeah, and it's a tough question. I get emails that don't contemplate a response, that just want to come across and be insulting and make fun of the way I look on a YouTube interview. You look stupid, and your glasses are ugly, and you have a terrible hairline, and it's like, well, it's all I got to work with. But judge me on the execution of the company. This is the best I got.
Yeah, and if you watch this channel, and I take this opportunity to thank all of my subscribers and members for watching and keeping the channel going. And I've tried to be very open about this all the things we've talked about, because I think it's important. And everybody's entitled to their own opinion. And, I guess I take just a small fraction of the heat that you take for these types of things. But to me, your company's going in the right direction. I love everything that you're doing. This is no shock to the people that watch my channel. I talk about it all the time. So I appreciate what you guys are doing. I'm just going to review here and see if I missed anything, because I think you've done a good job of kind of checking off my questions before I even ask them. Just a last couple of things, and then I'll wrap it up. Just really recently, we seem to have some institutional, I don't know if I can call it institutional adoption, but between the BlackRock news, the Fidelity news, Charles Schwab, we've got a lot of massive amounts of money that seem to be shifting their opinion on Bitcoin itself. Is this something you guys look at, think about, talk about?
Yeah, a lot. And I think we're avoiding saying ESG, but the companies that are stepping into the space are holding mining stocks in companies that at least have published a corporate responsibility report. And it's not about the virtue signaling. My personal opinion may not be in alignment with the political correctness of the ESG, but I think, like I said before, if you break those into individual silos, it's just good business practice. And so the companies that are holding miners such as CleanSpark are the ones that are looking for those particular practices, whether you label it ESG or whether it's just good business. They're looking for that because there are certain requirements for resiliency, sustainability, renewable mix, efficiency, et cetera. And so, for us, the three levers now are efficiency, efficiency, efficiency. It's efficiency of the fleet of machines that we buy. It's efficiency of our operations, our realized hash rate, and our uptime. And I'm proud to say that we're 99% plus uptime across the fleet. And then the last efficiency is efficiency of capital management. And we raised $50 million in the first quarter, and we deploy that money, and it's pushing revenue to the bottom line right now. And so when you meet with these fund managers, and like I mentioned, an ETF in the UK flew over to do a tour with us and talked about the culture. But that's really what they're looking for, is a focus on efficiency and the ability to continue to execute and grow in a meaningful way, supporting the communities that you're in, contemplating the halving event, and knowing that there's a path forward that is built on a whole heck of a lot more than hope.
Couple of specific questions, if I could, and then I'll wrap this up. I've kept you for a long time here, so I appreciate your time. The first one is that in Sonderville, so I'm trying to project from now till the end of the year. We talked about 16 exahash, and it looks to me, I'm not going to hold you to this, but it looks to me when I do the math, it looks like you're shortly, whether it's 30 days or 45 days from now, with the news that you put out today, maybe going to get to 10 exahash sooner than later. Is that a fair statement?
I think that's reasonable. I can tell you, I had every member of the board of directors spend a solid week with Zach and I in Georgia, and we rented a bus and we went to every one of the facilities. And, I had everybody on our board, from Dr. Tom Wood to Amanda Cavallari, taking machines out of boxes, cutting the cellophane wrap, putting them on the racks, plugging them in, understanding how they scan in. We at Washington, we have 4 buildings that are 500 feet long each. The infrastructure is there. The buildings are full. We're waiting on the utility to begin to energize those circuits. So, I think with 16,000, 15,000 and change new machines plugged in there, and then with this new 20 megawatt acquisition, I think, in that range, within the next 30 days is probably really a pretty good bet. I mean, based on the data that we have available, I think that's probably realistic.
Okay, and then obviously all you can do is go with the data you have available. But you guys still feel comfortable with the 16 exahash target by the end of the year?
So yeah, it's a big bite of the apple. So on my Twitter last 2 weeks ago when we were there, we've acquired this 25 acres adjacent to the Sandersville facility. I've got pictures and video of the substation being built as we speak on site, 150 megawatts. The buildings that we're building there are 2,000 feet long each. Engineering is done, air surveys are done and being done. Our construction schedule indicates that we'll have the buildings complete, ready to rack and stack October, November. The commitment on the substation is about that same time frame. The variability is when do the circuits get energized, but we have a great relationship with MEAG, with the electric cities of Georgia, and with the individual communities that we work with. So, our best guess on available information is that we plan for that. Certainly, as an example, there was lightning and rain this week in Georgia, and one of our guys on the new site said they pull all of the electricians off the substation during an electrical storm. Well, I can't say I'd want to be on a substation during an electrical storm. So, certainly there are opportunities for some variability there, but we try to communicate everything we know when we know it, so people can make an informed decision. So the most current available information is public, and we're just excited to get there. It's not an if, it's just it's a when do they turn the circuits on, and we're doing our part. We'll continue to do our part, and I'll continue to talk with you and anybody else that wants to chat about it and keep everybody informed.
All right. Well, I appreciate that, and obviously, nobody knows the future, but it sounds like you guys are on target, barring some unknown. So plus or minus, we're looking at 16 exahash maybe at the end of the year if everything goes on as planned. So that's exactly what you guys had talked about. So is there anything else? Did I miss anything? Is there anything else you guys are doing or on the drawing board that you want to talk about or that I've overlooked?
No, I think that was a really thorough interview. One thing that you asked that I may have kind of glossed over, you're asking about old rigs. We own and operate all of our facilities with the exception of some stuff that we host with CoinMint. Um, Moving ASICs miners around is never a good thing. You load these things on a truck, you palletize them, they bounce around, heat sinks fall out, you need repairs. The best real approach is to operate them until you're ready to rotate out of them and replace them. So we have our fleet efficiency will continue to increase as we buy new machines, as we plug in the machines that we bought and paid for. And you'll start to see us rotate out of, like, for example, some of the machines we bought when we bought Moss, and those will be rotated out, sold into other miners that, maybe that isn't as big of a focus. But, I think we look at it like dollar cost averaging into our fleet, making sure that we're prudent with the CapEx, but maximizing the ROI.
All right, that sounds fair. Matt, I want to take an opportunity to say thank you. It was very candid answers, and thanks for fielding all questions. I'm a big fan of what you guys are doing, so I will continue to have my eye on you guys. I do a video every single month. Once you do your updates, and then usually, and then some, because you guys are very, as you said, you're very active with press releases and that kind of stuff. So thanks for your transparency. Thanks for taking the time to meet and talk to my audience. So hopefully, I could ask you questions forever, but I'm going to leave it at that for now. And hopefully, we can talk to you sometime later in the year.
I'd sure welcome that. And again, truly from all of us, thank you for the work you do on the space. I get people ask all the time, how much do you pay Talking Investing to talk about CleanSpark? And I'm grateful that you're a high integrity guy and you don't come to me looking for anything. And I don't even think I've sent you a hat or a T-shirt, but that's going to change. I'm going to fix that. But yeah, I appreciate the work that you do and the integrity in which you conduct your business. So thank you.
Okay, thank you. So, all right, that wraps it up. Once again, thanks to Matt, and thanks for watching. So we will see you in the next video.